Hey guys, I hope you're all having a great weekend. This is going to be your daily cryptocurrency market update. We deliver these every single day at 1 p.m. I'm hoping I can get this out for 1 p.m. anyway, UK time, where we try and navigate these treacherous markets. Last year, I think for people that were new to investing, was a very hard year to navigate. It's why one of the reasons why we stayed out of the market for the majority of the year. 2023 is the year that I do believe we will be reinvesting. When exactly? I'm not 100% sure. Everybody's always asking me, when's the bottom? What price are we looking at? Where is it? The truth is, guys, I'm not going to know until we get there. And likely, when we do get there, we also still won't know. It's something that will be revealed to us with hindsight more than likely. We do have a lot of lower targets. But then we also have... made some significant progress to the downside. This is something that I am looking at, and part of my Patreon is really, it's very investment focused. We are looking to capitalize on what I believe is a revolutionary industry that is only really just still in infancy. But we will talk about that. But talking about the sort of treacherous and quite weird market that we're in, we're sat in dollar stable coins, and we have been for the majority of last year. Now, the dollar's been getting hit pretty hard, and actually this week, this is a really nasty wick that's coming on the back end of the dollar. There's quite a lot that is to do with this. One of the main things is, of course, what happened with Japan, with them altering their yield curve control and actually buying up more bonds than they'd initially said they would, and allowing a little bit of a wobble in the sort of yields. But actually, we've had a very, very aggressively priced dollar based on interest rate hikes. Certainly, if you compared the dollar, the Dixie is majority made up against the euro. You now have, the dollar basically ran away, and it's been sort of reined back in. Now, it's my opinion that the dollar reaffirms. I think the dollar, there's definitely the possibility that it comes on and makes new all-time highs. We've compared it to this kind of a period over here. We think there's a lot of similarities, and we think it's going to play out in quite a similar fashion. I do see this as likely. Certainly, the Fed's tone from the FOMC was that they're going to... Can you see this? Just because the schematics look similar, guys, doesn't mean that it's going to play out in the same fashion. It's just something I'm looking at. But after the FOMC, we had a very hawkish Fed. They said we're likely going to keep rates where they are for the whole of 2023. This means that liquidity is going to continue to be restricted, and they're going to stay in a restrictive environment in order to bring down inflation. And we've looked at BlackRock's forecast that inflation needs to come down by, GDP needs to come down by 2% to catch up with inflation. But yesterday, and why actually I think towards the end of last year, I quite struggled with day trading the market. By the way, guys, I will start doing my daily Bitcoin technical analysis videos again, because we've nailed it. Every single day this year, we've been able to predict where the price is going to a degree of accuracy. And this is my method of day trading, is basically by chopping up day ranges and looking for any trends that are there that I can follow, or looking for areas where we may pull back, and the overall sort of sentiment of things. But anyway, yesterday, and actually, I'll start on the point that I just touched on, was I found day trading relatively hard. Swing trading and directional trading, we've been very good at. Even day trading, we were profitable last year at a time when most people's accounts got destroyed. But I found day trading harder than I previously had, because of all the economic data. It makes the market very unpredictable, and the market does weird and wonderful things around these sort of data reveals. And yesterday we had the non-farm payroll, and we saw jobs rise by 223,000 in December, as a strong job market continues to top expectations. The expectations, or the estimates, were around about 200,000. So this shows a very strong labour market. This, in theory, should have been very bullish for the dollar. Now, when there's pariahs, look at what the dollar did on the back end of this, by the way, guys. So this should have been very, very bullish for the dollar, and it wasn't. Okay? Why is the question that you must ask. What else is going on? Now, in yesterday's video, we did quite an in-depth, not in-depth, but we looked at a number of things that suggest, like our commodity markets. This is we'll get off the hourly, because that's not going to help anybody. We're not trading the wheat futures. Fair play to anybody who is. This is wheat futures. It's back at pre-war levels. This is oil, right back down to pre-war levels. And this is natural gas, even further than pre-war levels. So what's going on? Are we having inflation weaken And the whole reason for the dollar strength was because the dollar was going to get strong as a result of people going into it, even though we had high inflation, because assets were going to get smashed as a result of the Fed tightening and being a hawkish to fight inflation. Well, if inflation's ceasing up, that means the Fed is likely going to be less hawkish and thus push the dollar in less of a fashion. So if inflation's falling faster in the US than it is, just like inflation going up, this is thinking here, guys, critical thinking, which your YouTube crowd, in terms of the influencers and these guys that just know how to make good content, and that's all. They're not analyzers or anything of the sort. And I'd certainly love to see their P&Ls or any kind of trades they took last year. I need to stop being horrible about them, don't I? This is thinking. So just think about this. So the inflation was going up in the US, potentially higher than, or at a more exaggerated rate than other countries like the European Union and the Great British Pound, although they all went up together, but the Fed kind of led. They led their interest rate hikes, and they led their sort of hawkish tone and their balance sheet roll-off. So that's why the dollar ran away in the fashion that it did. It's almost an inverse of that taking place right now, because inflation's coming down, which means they're likely to be less hawkish, do less interest rate hikes, even though they're saying they're going to continue to be, hawkish by all accounts. And I think where interest rates are at the moment is still very damaging, and we're kind of waiting for something to break. Still do see, even though, and I've said this yesterday, doesn't make sense to me being a full-on grizzly bear here. And you guys that have been watching me will know that we were... Where's my box? Grizzly bears here, grizzly bears here, grizzly bears here, and actually, if you look at the daily, we've had more ranges than this. We've been grizzly bears the whole way down, and now we're kind of saying we're not that grizzly at the moment. We still do think that there's real downside to come, and there's a real risk. However, it doesn't make sense being bearish when the price has already gone. It doesn't make sense being super bearish when the price is already 75% down. It can still go another 75% down, by the way, guys, but I'm just saying, don't understand. Isn't it funny how the majority of YouTube is now extremely bearish and the majority of Twitter is extremely bearish now? And that's a recent thing. Really, after we spilt, they were bullish here. How many of your crews out there will call in for the bottom in June? Only for it to get run and for people to get smashed. Anyway, I'm getting kind of off topic. So this is the main thing to watch, is the dollar. Now, we said that we didn't really have much worry about the dollar because of the yields. And the 10-year yield leads the dollar. Well, the 10-year yield is coming back down, but it may reaffirm. Often on an initial breakout, you get a retest of that breakout. And this is analysis that I'm going to be doing in a lot greater detail, of course, with my Patreons. And we've got our daily cryptocurrency, our weekly meeting coming up on Sunday for anybody who wants to join. Our Patreon is a subscription-based billing address. So essentially it means that you don't get billed at the start of every month. It was originally that, like most Patreons are. However, if you buy a Patreon and join the Patreon, you'll get billed exactly a month from when you first did it, for anybody interested. So it's very much still a dollar story. And really, the dollar is... And why is that? Well, the dollar's kind of a good barometer, a good kind of metric to weigh up what's going on and what the sort of tone of the Fed is going to be and the future action that it's going to see. So it's going to be interesting. And the big thing is, obviously, with this jobs report, this should have boosted the dollar. It didn't. Why is that? Well, it's because we have a lowering inflation, which is obviously the main reason they're as hawkish as they were in the first place. And you can see, actually, this is a trend, a trending down inflation. The expectations that they have, the consensus is 6.5 and 6.7 is the TE forecast. Not sure whether it will be that low, and you're going to get this on Thursday, guys. So if you get that lower inflation, it's likely markets will rally. There's going to be volatility around it, by the way. They could sell off first and then rally into it. But people also aren't looking at the fact that the reason inflation is coming lower is because there's demand destruction, which is also ultimately, consumer killing. Just like inflation is consumers get screwed, full stop. So it's going to be a very, very interesting week ahead. Sunday, I'll do another daily cryptocurrency market update where I'll kind of prepare you guys for that. I do a lot more in-depth one with my Patreons. But this is what we're watching. And all we can really say is that we're a lot less bearish here than we have been previously. Doesn't mean that we're not bearish. Doesn't mean we're calling the bottom. It doesn't mean we're buying. It just means that we're not as bearish as we previously have been. And take for that what you will. I want to leave you on a clip of Joe Biden talking about how well the stock market and everything has done. I don't care who's in power. I'm not a big fan of any of them. And I think that, in my opinion, and it's just my opinion, certainly the Western world is in a financial slavery. But that's for another video, maybe. Maybe I'll do a whole video on that. If anybody would like that, leave a link in the description. So let's just play this clip about Joe Biden talking about how well things have done. And I'll leave you on that note.
The stock market, the last guy's measure of everything, is about 20% higher than it was when my predecessor was there. It has hit record after record after record on my watch. The stock market, the last guy's measure.
I mean, it's just like Wonderland, isn't it? To be honest, he is definitely in Wonderland 99% of the time. By the way, guys, I'm not picking a side here on I'm just saying that it's just crazy world that we live in, guys. And actually, the fact that, anyway, I'm going to leave it on that note. So that's really all we've got for you. This was the main data that came out yesterday. Markets initially tanked on the back end of it and then saw that pump. We did call for this actually on our technical analysis video and our technical Twitter threads that we put out every single day, just based on price analysis. People that think that TA doesn't work have clearly never used it and clearly never profited from it. I know people that make millions of dollars off technical analysis, and you're telling me it doesn't work in the YouTube comments. I mean, have you tried it? And this is something that I also want to be an ambassador for, is let's not be hypocrites. Let's all get along and work together in what I believe is a super exciting and brilliant space that is going to potentially change all our lives if we take advantage of it. I was going to do the whole unemployment rate thing. We're seeing this actually continue to fall. And what happens when it falls? The stock market goes up. So we're seeing this decline. We're seeing this fall in unemployment. But my issue is maybe there's a bit of a laggard effect here because we're seeing job cuts after job cuts. So if this comes back up, this is likely going to fall. So this is something I watch. Well, I was going to do a little bit of United States CPI transportation, but I won't get into that. On that note, I'm going to love and leave you. Enjoy your Saturdays, guys. Please hit that like button, comment for the YouTube algorithm, and subscribe if you're not already, and click that notification bell. See you all in the next YouTube video. Have a wonderful Saturday, guys.